Moving on, the household savings hit a multi-decadal low and came in at 5.1% of the GDP in FY23 versus the figure of 7.2% last year. My colleague Ritu Singh is joining in with all the details on this. Ritu, tell us.
Well, Indian household savings have collapsed to a near 5-decade low because surging inflation is forcing people to dip into their savings and borrow more to fulfill their consumption needs. Recent data from the Reserve Bank shows that household net financial assets, or simply put household savings, have hit a 47-year low, dropping to 5.1% of the GDP in FY23 from the previous year's 7.2%. Now, during the peak of the pandemic in FY21, when spending options were limited, household savings had then surged to 11.5% of GDP. From there, we slid down all the way to 5.1%. Now, RBI shows this data as net financial assets, which is essentially gross financial assets, including your bank deposits, capital market investments, insurance, etc., minus gross financial liabilities, which is your loans from banks, NBFCs, housing finance companies, and so on. Now, what is even more worrying in the data is that household savings fell even as liabilities rose very sharply to 5.8% of the GDP in FY23 from 3.8% the year before, and this is the second highest level in the post-independence India. Now, while borrowings rose, household assets also fell to 10.9% of GDP from 11.1% the year before. Accordingly, household debt as a percent of GDP has also risen from 37.6% in FY23 from 36.9% the year before. If you further analyze the data, the share of currency and small savings in household assets declined during the year, while the share of deposits increased. The share of capital market investments, although it declined year on year, has quadrupled to an average of 0.8% of GDP in the past 7 years from 0.2% of GDP in the years before demonetization. Pension and provident fund savings have been largely stable. Now, this data is concerning because with a unanimous expectation of a shrinking current account deficit, investments can only increase if savings rise much faster. Now, household savings are a primary source of financing the fiscal deficit as well, and without them rebounding, funding the narrowing fiscal deficit could also become increasingly challenging.
All right, Ritu, thanks a lot for getting us all of the details.